Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, July the 5th, 2013. The U.S. market holiday is over, the Independence Day holiday, so we are back to the markets as of Monday. I mean, the markets were open today on Friday, of course, but it was very low volume, and you'll see that looking at some charts today. As we do every Friday, I'll be going over all the major markets that I track for you at PerfectStockAlert.com. There are 21 of them, but they give you the opportunity to know everything that I know moving into the week ahead. So let's get started looking at the 10-year Treasury note yield, the TNX chart here. On this chart, if you want to be bullish to the markets, this is the one that I would be looking to go long on. The reason being that it's driving higher, substantially so, and it has been doing so since May, and we've seen a massive rally here, and it's not an unsustainable rally. You don't have any conditions here that would indicate there's some problem or some peak or anything like that going on. We talked about that back when you had this rally up here. We told you had some dark cloud cover here. You were shooting up here above the upper Bollinger Band line. That can do it for a little bit, but then eventually you start to take pause and get that consolidation period, which we told you this was. And then we've seen that reverse here on this news today in the U.S. about the jobs number was better than expected. That is how that should have been played. That's what you would expect it to see happen. It was the jobs number shows that the economy is stronger in the U.S., and that gives the Fed more reason to taper, right? Or further agrees with their theory that it should be tapering. So that's what you should expect to see as the TNX start to rise, the yields. And that's important because that's something that's going to be sustainable for a good while due to macro event of being the Fed tapering over time. That will continue to drive this higher. So this is where you'd want to be long. This is the safe play on that. Quick glance here at Australia's market, the AORD. In this particular chart, you have either been stopped out or you are about to be stopped out. Here's where my stop's drawn, right here, that little blue line, so I'm right there on the nose. And we will get stopped out probably tomorrow, and that'll be fine for another bounce here to the upside. Am I playing this on the long side? No, that's my answer to that, and someone else will, but I see the longer term picture as more important to me, and as I pointed out with the Fed tapering, that going to be hurting stocks as well. So I'm not going to be looking to be long stocks right now. But let me show you the long-term picture so you understand what to expect here. Okay, this is the ARD weekly chart. Each one is kind of represent a week worth of trading activity. And you can see that we have broken the major support that we had here. Well, actually, the resistance we had right here, I should say. And we broke above that point here, and we started to test that, and we found support. That's fine. We bounce up here, make a higher high, and then we come down here and we break it. Something just changed. Now you have a series of high points here that are trending up, and you have a series of low points here and here that are trending down. All right, that's a conflicting signal. Basically, it means sideways moving market activity. Whenever you have higher highs and lower lows, you're just saying sideways, basically that way. So what's going to happen here is we can obviously see a bounce up here, and then you can look to find some resistance at that previous resistance that turned into support here, that then turned back into resistance, so that you'd expect to find that here. Any move up in this area here can do very many different things, and so you don't want to be just short and waiting for something. Wait for those signals telling you that you're getting a sell signal and confirmation, so forth and so on, to get short again when that happens. And that can be at this middle point or even up here at this higher point. We'll show you other charts that will show that the widening top formation there. It's still rolling over. Sideways movement activity just does so with a lot of volatility. And you get a high point, low point, higher high, lower low, higher high, and then lower low yet still. So that's another formation that could be forming here, and we'll look at it. But again, I don't want you just holding the short position down here, because you got a lot that could happen in here that would really hurt if you're short. So sit back and wait and see what happens and how it develops before you take any kind of another short position here. If you're going to be long, then let me quickly clean that up for you. The low of the current pullback would be your stop, and that's what you'd be looking at right there. And you'd be looking for this to come up here and not test this again. If it tests it again, it will fall through it, and you'll have a major problem. The Dow Jones Industrial Average here in the U.S. made a nice 147-point move to the upside, but this is the thing we talked about earlier in the week. We told you that the activity you saw during the holiday, especially toward the actual Friday and Wednesday, would be suspect because it'd be so low volumes. Let's go ahead and move on down the chart and show you that. You can see that the volume is so low that it's not even worth calculating. It's not trustworthy. Whenever you have a breakout, anytime you're doing a bullish condition upside or otherwise, you want to be analyzing the volume, especially on the breakout. And so we have a situation here where we could draw this like this and say, all right, well, we just had a little wedge formation or flag pattern here, and then we had the breakout today. You can do that, and that would simply mean that you would take this distance down here and say, okay, I expect this to be duplicated out the other side, basically test the previous high. That's fine, but I would warn you have a massive issue here on the volume. That move that you saw today on Friday may simply be fake and get erased the following day on Monday. So that's important to know. I also want to point out that you have earnings season starting on Monday. So after the market close on Monday, the July 8th, you will see Alcoa report, and then that's going to start to affect the markets as well. You get companies come out and report good news, you'll have an up day. As companies come out and report bad news, you'll have a down day. If more companies outperform, then you'll see we'll continue to move higher. And if you get the other condition where you have more companies performing poorly, then you'll get taken out to this will come up here, fail, you'll get a sell signal, and you'll start to move lower like this. So keep an eye on how that can develop. Again, if you're already out on the short side, wait for a new opportunity to get short. If you're not, if you're still short as I am here, my stop is right here. If we take that out, then fine, I'll sit back and wait and see what develops. Right now, I still will trust the overall economics factors that are driving the market, which would be the end of QE. That's going to affect the market. I expect to see more companies missing on their earnings. I expect that this season. Reason being that the previous 2 seasons we've seen a failure on the revenue, the top line in the income statement. They've been bringing in less and less money, which makes it harder and harder to perform with beating expectations on the earnings. And so that's important to take into account. Quick glance here at the trend, the Dow Jones Transportation Average, and again, we've got a couple of sell signals with no confirmation here. We had one here and we had one here, never confirmed, so we couldn't take them. And now we're just making a little move up here to the upside. Little gap below us, nothing major here, a little gap above us as well, so we can continue to move in this range. Just watch for a sell signal. We haven't had a good one since this one here, and our stop is still set off of that one. We want to see lower series of highs and lower series of lows, so we have this one here, and we have this high point. Now notice how you trade up here. You come up here, then you sell off. No shooting star here. Oftentimes, that sell-off will not be the end of it. It will still come up here, test that high again, oftentimes make a new high, wait for the shooting star. That's what's going to be important. When it forms and you get confirmation, then you can take that as a sell opportunity and start looking for the breakdown. Right now, we're just not seeing that. We've got a couple signals. We continue to press higher, wait for something that gives us a signal with confirmation, then short it. Quick glance here at the French CAC 40 index. Basically, Europe sucks, and that's the only way to say that. They have a very large socialist view, and it doesn't work, and the longer they pretend to play like it does, the worse it's going to get over there. Recently, there was some news out, I think I saw it was a couple weeks ago. They're talking about how they're having riots with their youth and stuff like that in Europe, and because they can't get jobs, and that makes a lot of sense to me, because they've simply raised their wage so high that whenever you have a business that's going to have to spend money on an hourly wage is pretty high for labor, they're going to get the most qualified people they can find. That means they're going to typically not be hiring the youngest new guy right off the street, right? That makes a lot of sense. So those guys aren't getting jobs, and that's a problem. So instead of, when they come to this conclusion and realize the problem, instead of saying, you know what, we should get our hands out of the free markets, they've decided to do something else, and of course that just keeps their jobs in place, but it also doesn't solve the problem. So I wouldn't be looking at this market as being improving anytime soon in Europe, and I'd be looking at major problems here as rates continue to rise globally. Like I've already showed you the U.S. TNX chart. Rates are rising. That's also happening in Europe. That's going to cause problems there. Keep an eye on that. I'm still bearish here. Stop is still set way up here off this previous high, and we'll continue to watch this. Let me show you guys one more thing on this chart, and you'll see it on a lot of them, except for couple. For most part, you've already seen. If you come up here, you hit this high, lower low than you've seen before. We had this big bounce. We simply give it all back, and we take out the previous low. There is no real support here. This is just a bunch of attempts by the government to come out and stimulate with words. Say, well, we're going to lower this, and we're going to help you with that, and we're going to whatever. You can't sustain it, and that's the problem we've seen in the markets right now. Is we're topping, and that's that because you're taking out lows. Quick glance here at the MIB, same basic overall story. The Milan index, if you're looking at trading Italy, you can see low point here, took out right here. So you had the big move up here. We simply give it all back, and we took out going even lower. So the strength is in favor of the bears here. Any bounce we have here just bounce. As long as we don't take out previous highs, we're still in an overall downtrend. And you could still come up here and do all kinds of different things. There's lots of room. You have a gap here you can fill. You have no shooting star right now going on developing, so you could still press higher here. But again, be looking at this as a topping pattern overall, bigger picture. Quick glance here at the German DAX composite, a little bit stronger in Europe, but still the same overall problem. We've had to move up here, and then we turn around and just start giving it all back. Now we come up here and bounce, no shooting star at this level here, sold off, and bounced quickly, and then we turn around and get a sell signal as of Friday with another massive move to the downside, giving us a bearish engulfing signal. Again, we could still fight, kick back and forth, do random things here. We have a gap here that could fill. We have room to move up here to the 50-period moving average, which you typically expect to find resistance at that point. A lot of different things that could happen here, but the overall bias should be bearish. Again, I want to point out the ultimate oscillator peaking out at that 60 line, bearish condition when you've got that. All the other charts we've just looked at, except for the TNX chart, all the other market charts are showing that you have an overall bearish slope going on, and then you have some fight in the markets. You're still trying to kick to the upside. You're not going to see that in gold. So if you want an easy sell, this is where you'd be. Gold, silver, those are the easy sells, and the easy long would be TNX, and the others are going to be more difficult, but they can be traded as well. Just wait for the right setup. So right now, looking at gold, we talked about this last week, earlier this week, I should say. And again, we got stopped out here with a nice opportunity. We got stopped there. Again, no hammer candlestick formation. The bounce is just a bounce. Sell signal forms a couple days later. We get confirmation today. It's a sell. Look for this low to be tested. Again, should be pointed out. Look at the 60 line here on the ultimate oscillator. That's all you need to know. That's how you read that thing. When it's indicating momentum is weak to the upside, then you're in a bearish market condition. Quick glance here at the Hong Kong Hang Seng Index. Massive move to the downside here. We've taken a nice little bounce. And this is basically the same thing as the AORD chart, the Australian market. You've got a bounce coming. That's fine because you have to have a massive move to the downside. We're still in cash in this situation here. We've shorted from here, made this money here, advanced the stop to this point, got stopped out. We got a sell signal. We didn't get confirmation, so we just bounce around here. We're just watching. We could actually move way up here and take this previous point here. We're actually filling this gap and also come up here testing the previous support, and we expect to find resistance at that level. You could also press a little bit higher and hit resistance at this 50-period moving average. But all of that still very bearish. You still have an overall downtrend, nothing to do here but sell and look for the right opportunity to do so. Alright, now we're going to take a picture of the Hong Kong Hang Seng Index of the long-term picture, the weekly chart. So each one of these kinds of represents a week worth of trading activities, covers 2 years of activity. And you can see that this long-term uptrend here, that we had support here, we had support here, we had support here, support here, support here, and it ended there. So we expect this support line to now act as resistance when it's tested. So the bounce in the Hong Kong Hang Seng Index should be short-lived, roughly to the 20-period moving average here, the middle Bollinger Band line, and that would put you in line with that same here. So that's why we're looking for that kind of resistance point to start showing me some kind of a shooting star signal on the shorter term chart, and that kind of situation would be cool for a sell at that point. Remember, this is clearly non-argued downtrend right here. Lower series of highs and lower series of lows. When you have both of those in play, you are in a downtrend. No question asked. Having a quick glance at the BSE here, the India Bombay Stock Exchange, you can see today's activity. We have a sell signal shooting star at the 50-period moving average. Again, note that's where you'd expect to find resistance. When you break below the 50-period moving average like you did here, you would expect the next time you come up to it, you'd find resistance. So you did here, you did here, and you've done it again here. Again, you'll note also that this shooting star is in line with the previous one that you had here. So that sell pressure that is at this level right here still exists. It's not gone anywhere. I would continue to watch this for confirmation to sell, and that's for continue to do so. I don't see anything here that would be bullish because this bottom here was not a hammer candlestick formation and not going to be held when it's tested, and so there's nothing here to do but watch for an entry opportunity on the sell side. Quick glance here at the Japan iShares at EWJ, designed to track the Nikkei, and in this particular chart you can see that you have broken to the upside. We've been stopped out of our short position here, and then we're coming up to fill, looks like this gap in here. That's fine. It won't make any difference to me. The uptrend has already broken there, and again, with rising rates comes the problem. This is what rising rates does to a market. That's what we saw this fall from, was the rising rates in Japan, and then of course there was the same rates were rising in the US, and the same will be rising in Europe as well. So that's the most important things you've been looking at right now, is the rising of rates and how it's going to affect the market. And as it could be argued many different ways, but one of the things to point out is that as rates rise higher and higher, it puts more and more pressure on the Fed to end its stimulus. And so that's important to note, because if your interest rate was at, let's say, 3, and then the Fed says, okay, well, now we're going to end it. Well, now it's got pushed up to 6, right? So if it rises all the way up to 5, and then the Fed says, well, okay, now we're going to do it. Well, now it's up to 8. So it puts pressure the higher it goes on the Fed to end its quantitative easing. So it's important to keep an eye on. Quick glance here at the FTSE, London Financial Times Index. This was a pretty clear chart and pretty easy to use. We got stopped out of it, and then we got a signal to get right back in as soon as we got stopped out. The reason for that was that there was no place above it to to put a stop loss limit that was above this 50 period moving average, and that's important for a reason I'll show you in a minute. You've had to move up here, and you turn around and you completely erase the entire thing. You notice that you also took out the previous support line. Again, no hammer candlestick formation. This is just a bounce, nothing more than a bounce. We come up here, and you'll notice in this previous showing here, we kind of bounce for a day, and then we don't get a shooting star, and we continue to move lower. We bounce for about 4 days, no shooting star, we continue to move lower. We bounce again, no shooting star, we move lower. We bounce higher, and we get a shooting star, and that's what you're waiting for. That's that final end of a bounce kind of scenario. That's what you're looking for. And again, you'll notice it is in line with finding resistance at the 50 period moving average, which is what you would expect to find there. So all of that makes sense. Look for confirmation, and then we'll continue to start shorting it to the downside, looking for this to test down here and break through. Quick glance here at the NASDAQ. I cannot find a weaker chart. This is absolutely disgusting, or as my 4-year-old would say, ungusting. It's just horrible, and there's more gaps below than this shows a great deal of weakness in this chart. Now, if we look at the activity here today, I could call this a hanging man candlestick formation center sell signal. I just have nothing here on this chart but sell signals. There's nothing here that's good. Lower series of lows, no hammer candlesticks off the lows, gaps galore in it. We come up here and fill this gap, so now we have nothing but gaps below us. It's just nasty. We are testing the previous high. It doesn't make much of a difference to me. Again, I want to point out the volume on this actual chart we talked about. When you're in a holiday volume, and a lot of that activity just gets erased anyway, so it doesn't really matter what happens during the holiday. And so what we had was a move to the upside on really low volume. Now watch for a peak. Quick glance here at the XOI oil index. If you were going to try to trade this as a bottom and call it some kind of a bottom that we're seeing in the market, this scenario here, right here, this is a good place to do it as well, XOI oil index. If the others are in fact going to do it, then you're going to see a bottom, you see a rally there, you would see the improved economy theory, then you would actually see oil going higher. Also, if you have more unrest in the Middle East, then you would of course see oil going higher, and so that's something you could see on the long side. Also, you could come up here and easily fill this gap here and test into this one here, and it would still be very profitable for you, and you'd have time to get out. Also, you can note you have a hammer candlestick formation here that you could use with the stop set off that low, this being your confirmation of your buy signal here. Just looking for a little move, not a big move, but just a little move. Let me draw this out for you. This little move here, right here, so we measure that distance right here, and we add it once a breakout, and we haven't had a breakout just yet from the overall chart, but you can see that once you did, you would see a little move up to about here. So that would make sense if you wanted to go long something for a few days. XOI oil might do it. Quick glance here at the UUP, the PowerShares DB US Dollar Bullish Index Fund. This one's all over the map. A lot of volatility. You can play it at both sides because you have the low point, the lower low, the lower low, and the high point, the higher high, the higher high. So you have this basically humongous formation going on, lots of volatility. Just look for a short opportunity in here and take it back to the downside. If it were going to become stronger, you would expect it to pull back at some point. Let's say you were to get a shooting star in the next couple of days, and then pull back, find support at the 50 period moving average. At that point, you would have high point, higher high, low point, higher low, uptrend, buy scenario. That would be something you could do. If that didn't happen, you'd already be short here. You'd be coming down here, breaking through. A lot more money be made on the sell side. So again, this is an opportunity to get short if you can get the right signal. Quick glance here at the Russell 2000 Small Cap Index. It's been stopped out of this one as well. There's a couple of short-term charts on the short side we've already stopped out of, so we'll probably see more of that happen next week if this continues to press higher. And so keep that in mind. You can be stopped out of a lot of things, and that's fine. But on the long side, you want to do it in situations where you feel safer, more confident. Don't be just going long everything because they're bouncing to the upside. Lots of gaps below you that's going to come back and fill as well. So it's important to keep that in mind. On this particular chart, again, I'm not bullish. I don't see it as being something that can be sustained. And again, I would point out that this rally that we see right now is a low volume one. Quick glance here at the S&P 500 Large Cap Index. Not stopped out, or you have been. Depends where your stop was at. And if your stop was here, off this previous high here, you're stopped out. If it's here where mine is, then you're not yet, but it might be soon. This, again, is the same kind of signal we talked about before. You have this little move here, here. Simply measure that distance out, and that will give you an idea of what you're going to be doing. Testing the previous high. Again, not a big deal. It doesn't change anything for me. It's still breaking down, closing below the 50 period. We still have the same fundamentals that are driving this breakdown, which is going to be the end of the QE, and so forth and so on. So there's nothing here that would be telling me to go buy this. Again, if you were going to be a short-term trader and say, I'm going to buy it, the word of caution I give you here is this is your hammer, that's fine, and this is where your stop would be, this is your a confirmation signal where you'd be a buyer looking for a test of this high here. However, it's really, really low volume, and so that's why I'm not doing it. Silver is basically the same thing as the gold chart, an easy sell. Quick glance here at the TSX, the Toronto Stock Exchange. This one again is giving us the same sell signal we have here. The sell signal was in play there. We got confirmation here, so you can start selling at that point. Your stop could be set here, but again, that would be just below the 50-period moving average, and not a great place to stop, because oftentimes you go and test the 50-period moving average, find resistance like you did here, and then you simply go lower anyway. Again, no hammer candlestick formation here. We took out the low from here, so all these signs are very, very bearish. We came up and tested the previous high before, you can't see anymore, and we failed to take it out. We got sell signals, and we just simply gave it all back. Now we're bouncing around here. I expect you can do this kind of stuff here. You can do a lot of different things that are going on. Eventually, you're going to take out this level here. Quick glance here at the VIX, the volatility index, which runs the inverse, the opposite of the S&P 500. Again, this would be confirming the signal you saw in the S&P 500, where you could see a little further move to the upside. However, again, it would be low volume because both are traded during the holiday season in the U.S. And again, a point out here that you have now pulled back down here, stopping yourself out at this point. Remember this trade that we did back here. And then you're advanced to stop to this point here, so you've been stopped out. And at this point, I'd be looking for an entry opportunity back on the long side on the VIX, and that would be bearish for, of course, the S&P. And the reason for that is that you have this chart going high point, higher high, low point, lower low. So I have conflicting signals, which simply means sideways moving market activity. So I expect to see more coming up here and testing this level again. So you're basically just seeing this develop like this, and then look for that. And you either get a lower high or a higher high, but either way, there's still a move to be made to the upside. Let me clean that up. The only catch is you're going to have to wait for it. You're going to have to wait for a nice hammer candlestick formation to develop before you can get on the long side. And you may not get it, and so that's always important. That's why we track multiple charts, look for opportunities. Sometimes they set up, sometimes they don't. The main thing here is that this one, again, is calling for a move to the upside as well. So that's another signal calling for it, but I'd like to see a hammer candlestick formation like that, like that, like that, before we get the signal, and then we take it as an opportunity to buy. Looking now at the Wilshire 4500, you can see the same basic overall chart formation that we've seen on U.S. markets. However, again, I have to warn that it's low volume and not something I like in that scenario. You can look at this and say that we have this point here to here. Actually, it should be drawn like that. And say this is the measured move right here, and so this right here would be duplicated out the other side, right up here, testing and actually taking out the previous high. That'd be fine. You could see that scenario develop as well. I mean, that's something that I would look for. However, you still have the same problem. You have this low point here, lower low here, you've got a high point, and even if you got a higher high, you'd still have conflicting signals, which means sideways moving market activity, which means topping, which means you can play both sides, which means you can look for another sell opportunity at the end of this, which could come into play, depending on the volume scenario, it could come into play as early as Monday. It could also come into play later in the week, but it's something to keep an eye on. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, and please refer a friend. Enjoy your weekend, and I will see you all on Monday when the market really gets started. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.